Okay, thank you, Lainey, and good to meet everybody here. And thanks very much for having me take a portion out of your day to talk about a topic that's been near and dear to me for quite a number of years now. Next generation digital financial services, and it's really, from a relevancy contextual point of view, focused on next generation. I mean, we've all gotten exposed to forecasters and futurists that are looking down the road, but really in this industry, in terms of financial services, I think you can really only focus on what's relevant in terms of the next generation, your children, and maybe their children to some extent, but it's really hard to go any further beyond that and have any grasp of reality. So a little bit more about me. Let me get what's going on with this. Here we go. Okay, so as Lainey said, I've worked all over the world. Actually, I'm from the U.S., but I've been in and out of Europe throughout my career. A number of times in Asia. I lived all over the U.S. I grew up in the Northeast. I lived in California. Now I'm in Northern Florida, where I have family, and my family's here with me. Most of my career has been at the intersection of financial services as an industry and technology, spanning a number of tech areas, full stack technology from hardware, software, data and analytics and information architecture and web services and SOA front end. Most recent years, I've been focusing more and more on emerging tech. So artificial intelligence, blockchain, those are the big two. But in the past couple of years, also quantum computing quite a bit, which is impacting a number of industries, or starting to now. So I'll be covering that a bit too. Where did I come from in terms of the companies that I worked for? I just returned back into the US in the fall. The previous 4 years, I was with Huawei Technologies at their headquarters in China, and I led our global banking and financial markets strategy in in our corporate strategy department. I've also been a CIO and CTO. I just started with another company here in the US in Florida, and we're building a digital asset bank and a concierge service for the ultra net high worth target segment, which is really cool. So a lot of interesting things going on there. Been a CIO and CTO for startups, two or three now. Prior to Huawei, I was with IBM for the longest tenure out of my career, 11 years. KPMG before that for 7 years. And then Wachovia Bank, Coldwell Banker, as other companies. And I've primarily stayed more towards the technology side of the profession, architecture, engineering, a number of years in consulting with KPMG as well. So it's a really bit of a blend between both business and tech. So I'd like to kind of start by saying, and this kind of, plays out in a number of industry verticals. Okay. Now, as you go to V school and you get more interested in programming languages or the language selection du jour, okay, on what do you want to study that's emerging and to apply it. And then that typically will funnel into a specific technology that's catching fire across a number of verticals. In financial services, though, okay, each of these technologies and the underlying programming languages, okay, are catching fire, but really to move the needle forward, okay, in terms of the functions for innovation, there's a convergence play going on. So you have artificial intelligence kind of converging with Internet of Things or blockchain, okay, in terms of innovating and disrupting certain common functions in financial services. And that's what this chart is kind of showing here, is it's kind of showing on the left and the right finance functions and accounting functions mapped to emerging tech. And then the first thing you kind of see is it's not one and only. I mean, there's overlap here. And that's exactly what's going on. So that's kind of the first message I want to leave you with at the onset here, is it's not one technology mapped to one function to solve the problems that have occurred in the past. It's going to take a convergence of technology. So from a student perspective and where you pick what programming languages, and if you focus on this vertical and some of the others, healthcare is another example, keep in mind that your programming language that you study can be applied across a number of emerging technology vectors, okay, for application. So that's the first point I wanted to bring up. Okay. Now, if we look at what's kind of fueling some of this from evolution perspective, specific to the industry, okay, we started, hundreds of years ago in informal banking, and to a certain extent, we're going, back to the past with cryptocurrency and Bitcoin. Okay. I mean, these are nascent currency trading systems. Okay. They're alternatives to traditional fiat, the US dollar, the euro, so on and so forth. Okay. And that's kind of also led itself into, you've got these fiefdoms. Okay. You've got the Ethereum crowd and you've got the Bitcoin vans. Okay. So community led banking almost to a certain extent. But where the crossroads is coming in is, and as we've seen banking change, where you move to universal banking, everything under one roof. So anything that you wanted to do 1950 to approximately 2000, you went into the bank branch. They owned your financial relationship. Okay. You had to go into a brick and mortar branch. And then depending on your need, you took out a credit card or a mortgage for a house or a personal loan or a checking account. Okay. Now it's becoming more and more unclear in terms of the boundaries of ownership. Okay. Because as consumers, we expect to consume financial services 24/7. And I'll be damned if during a COVID pandemic, I'm going to jump in my car and go down to the bank branch and wait 7 days to get money for a loan. I want to do it from my phone, and I need milk for my baby. Okay. And I need it delivered to the house. Okay. So this brought up really the advent of omni-channel banking. Okay. And there's a distinction between omni-channel and multi-channel. Okay. That's another key point, especially with the overlap of the programming technologies and languages. Okay. Omni-channel was essentially taking a banking service and those products and allowing you to consume them from the bank, okay, at any digital access point. So whether that's an ATM, physically at the bank branch, from your mobile phone, or from your internet browser. Well, now we're moving into ubiquitous banking or multi-channel, okay, because when you buy something on Amazon and pay for it and have it delivered and track its shipping, okay, and integrate with PayPal, you have no idea, based on that customer experience journey you're going through, where the touch point is to your bank anymore. You're touching multiple platforms. Okay. So those financial services, starting with payments, but also now moving into credit and lending. Okay. If you need to even borrow, okay. And you do this from Amazon. I mean, Amazon financing, PayPal credit. Okay. You're no longer going to the bank. You're going on an e-commerce platform and you're doing financial services. So multi-channel means it's across industry platforms and services. They're embedded. So it's becoming, the financial services are a utility that's being embedded further across different platforms by different industry verticals. And emerging tech is kind of fueling that. So microservices, artificial intelligence, IoT. Okay. So it's not only the edge from your smartphone, it could be, 5 years from now from your refrigerator that your refrigerator senses you're out of milk. It reorders it. I've seen this. I mean, this tech is ready now. You put stuff on a tray in your refrigerator. Once the sensor determines that tray is empty, it automatically reorders and you don't pay or do anything. I mean, your refrigerator is doing everything. So moving to banking as a lifestyle or ubiquitous services embedded, okay, based on your day-to-day daily experiences. So if we look at what our digital financial services, okay, what the heck are we talking about here? Really, if you look at it and you break it down, simply put, into our basic needs as humans, and it's really 3 or 4 key areas. Number one, we need to pay for stuff. Okay. And once again, the pandemic showed this. We're all cooped up. We're not going even on our internet browser, on our laptop. Okay. We're watching TV, the dog's barking, somebody's at the front door, maybe. Okay. The phone's ringing, and you still need to order food and pay from your mobile device. So that's the number one need. And you need to do that 24/7. Now, maybe you ran out of money in the back end to your bank account that's tied to DoorDash or whatever card you have tied integrated into that application. Okay. So you may need to borrow money and do some spot lending, microfinance. So credit and lending is the second key area in terms of a digital financial service that's being offered 24/7, anytime, any place, anywhere. You may need to send money, and I use Venmo consistently, probably now 2 to 3 times a day. I just used it twice today to pay my cleaning lady and also pay the car detail people. Okay. They came out, didn't even talk to them. They detailed my Jeep and they left and said, okay, Bill, text message, we're leaving. Here's the Venmo account. Pay me now. Okay. So there's remittances. Okay. And, so, we're taking this stuff for granted. Okay. But we're not interacting with financial institutions directly anymore. Now, the last bastion in terms of needs is really, what I kind of call financial asset protection. Okay. And this is where we have a little bit extra money, thank God, time to time. And we have our deposits, our bank accounts, we have insurance, and then we have some extra money and we can put it in Robinhood or Acorns or Stash and do some investing. But even that, I mean, Coinbase, whatever. I mean, you don't have to call up Coinbase. You can't even get anybody on the phone anymore from Robinhood or Coinbase, really. I mean, it's an email, right? I mean, so, it's total disruption in the sense that you're doing everything from your phone, okay, even to do investments and move large amounts of money. Okay. And that's disrupting the traditional brokerage houses like Fidelity, Morgan Stanley, Raymond James, Merrill Lynch. Okay. So our expectations have changed everything in terms of those key areas of needs on what we do in our life. Okay. And that's fueling the disruption and bringing about digital financial services. If you step back a bit, what are really the three forces that have fueled this? Well, we've got accustomed to being lazy and doing everything in the sharing economy. Okay. I mean, I read there's a great chart. I didn't put it in here, but it looks at maybe 12, 15 countries across the world, and it analyzes on a daily basis how much each citizen is using a sharing service, whether that be ride sharing, food delivery, anything, cleaning, whatever the case may be. The averages are 6 to 9 times per day. Okay. So that's fueling business model evolution. And, those players are not staying in their own lane. Okay. So obviously Uber started with rideshare. Well, I used Uber Eats 3 times this week already here in St. Augustine, Florida. And I never use them to rideshare. I'm using them for food delivery now. So they're starting to expand into different directions horizontally in terms of their business model. Okay. And what's doing this for them? Okay. The third force is technology enablement, namely artificial intelligence and analytics. Okay. They're learning everything that you do from your device. Okay. And then the more that you bind to the back end in terms of payment methods, that unlocks a further treasure trove of information about what you want and what you need in your life. Okay. So, really fantastic. And that's kind of fueling and further satiating our need to have anytime, anything, any place, anywhere in terms of financial services. Now, if you kind of go a little bit deeper, okay, and you look at what's happening, this is really a representation of really three camps. Okay, the traditional camp or the industry in the middle, the house of the bank, for lack of a better term. On the left, you have GAFA, Google, Alphabet, Facebook, and Apple or Alibaba, depending on where you choose. Okay, so you have the big tech, non-bank entrants, the giants, consumer tech and big tech. On the right, you have fintechs. Now that term, depending on where you are in the world, means different things to different people. But the way I look at it is fintechs are not the same as big techs. Okay, because fintechs are kind of looking at getting into disruption based on a certain functional area. So what's the best example of a fintech? That's probably the biggest well-known fintech globally. That would be PayPal. Okay, PayPal started in payments. Okay, and now they're moving further into that bank house in the middle by getting into credit and lending. Okay, but they absolutely started in payments, okay, and really capitalized on that. And now they're moving into other areas. And then you have wealth management, loans and mortgages. But the difference is fintechs are focused on one functional area to get into the industry. Okay, the other key comparison point, okay, and similarity, both of them are coming through the roof in terms of mobile and internet access. Okay, so obviously the consumer tech, big tech, as well as the fintechs are all from the mobile device and then secondarily internet. Okay, and they're moving further and further into the hierarchy of needs I mentioned earlier. They already got into payments and credit and lending, and PayPal's doing credit and lending now. The last area of defense for the traditional industry is really financial asset protection and deposits. And Google announced that they're launching a debit card recently. It'll be backed by a traditional bank, okay, but there you can make a deposit via Google coming up soon. So, and the key really is not so much the system of record or license, okay, and to a lot of extent that'll stay with the core industry, okay, because we still have data privacy concerns there in terms of customer masters and product masters and so on and so forth that traditionally would stay with a bank. But where it's opening up is the digital platform and data and analytics, okay, where these players on the left and the right are learning more about you and what you do. And that's how they're getting further into disruption in this space, okay. Now, if you look at it from an ecosystem perspective, okay, really good chart here. And this really breaks it down in terms of, for lack of a better term, the traditional core networks of the financial institutions. And that has been, and for quite some time will be, Swift. So if you do any money transfer, that's all done by Swift. But Ripple, okay, and XRP have been disrupting that, okay, from the very, very center of this diagram. Then you kind of go outwards, okay, and then you get into infrastructure and core banking systems. And these are being further and further abstracted. So typically these would be inside the bank, private infrastructure, private cloud, if it is virtualized. But you're starting to see more and more disruption where this is being abstracted out in terms of platform as a service. And in many cases, in some cases too, software as a service and core banking packages. Okay, where it opens up, okay, and we get more multi-channel and horizontal. And this is really something I want to leave you with in terms of a focus area. If you're interested in going into this space from a technology perspective, it's all around APIs. Okay, and that's where you see that 3, 4, and 5 concentric circles. Okay, because APIs are starting to do the transformation function. And then based on the licensing model, either the financial institution traditionally or the fintech would open up their APIs to third parties outside the industry to consume information and charge for it. Or they do inbound integration of APIs from the outside to expand horizontally. Okay, so a lot of different commercial licensing models with APIs. Okay, but from a technology and programming perspective, okay, Java, JavaScript, okay, JSON, to a certain degree, moving more into AI, Python. This is becoming more and more interesting and instrumental in this space, those 3 center circles. And then when you get out to the outside, it's more around that last bastion of disruption, which is financial asset protection. Okay, and how much those APIs are going to be exposed to allow some of these other players from the fintech perspective to get in. Okay, so robo advisors, wealth management, Robinhood, Acorn Stash, so on and so forth. Okay, and then expanding payment services into other areas inside the bank from outside. So now, if we kind of look at who's creating a lot of disruption in the marketplace to the industry, okay, it's really a number of players I mentioned earlier. So, a number of surveys were out there, and, coming up, starting next year, going into, the next 3 to 5 years, These are the players that were voted most likely to succeed in terms of disruption. Okay, and it kind of sequentially follows the left side all the way to the bottom of the right side. So you'll see, the most people, consumers and inside the industry, feel that the leading digital e-commerce platforms will start to take over. Okay, so Amazon, Alibaba, followed by consumer tech giants, Google, Tencent. Then you're starting to see further expansion of the fintechs that have been at it for a while. So PayPal is moving into crypto now. Okay, they're moving into credit and lending. Okay, a new model are challenger virtual internet banks. So they have kind of followed a page out of the technology playbook of the e-commerce giants and consumer tech. And these are new banks that are popping up that don't have branches. Okay, they're internet banks, they're virtual banks. Okay, and some of them are standalone, new entities, new companies, and some are being launched by traditional banks and rebranded as new subsidiaries. So Standard Chartered did this with Hong Kong and a new bank called Mox. And they do this because they're playing both sides of the demographic target segment. So in Hong Kong, as an example, Standard Chartered has a lot of old wealth, okay, and a lot of older demographics that like to go into the branch and talk to people. But they're also trying to keep the youth from leaving Hong Kong. Okay, so they launched a new challenger digital bank called Mox, and that's catering to a younger generation and offers faster services and all internet and smartphone banking. Okay, so that's kind of a different business model for the incumbents, where they're trying to fend off disruption from the left side that you see there. That works on a geographical basis too. So a bank may come into, Northern Africa in one country, and then instead of launching branches in an adjacent country, they'll just launch a digital bank, okay, without having the big footprint. Okay, so that's been working well. And then you're starting to see disruption from other sectors. So Orange Bank started with Orange Telecom. They're not a banking company, they're a telco. So they realize that they have a lot of information on consumers from the device, and they're starting to offer financial services now in many countries. Ping An is a big conglomerate in China that started in insurance, that's now in banking and moving into in healthcare as well. And then lastly, on the bottom are a handful of banks that will not die. Okay. HSBC, Citi, China Merchant Banks are all examples of innovation. Okay. Kind of inside out. Okay. So they are developing digital services, and they're moving quite well. Okay. To keep up with the disruptors. So it's very much a mixed bag. So, in the next 3 to 5 years, nobody is going to own this space. But the message you take away from this is the traditional banks don't own it anymore by a long shot. Okay. And a lot of people, everybody on this call knows this. I mean, you keep with your financial institution, but then your money's spread about, I don't know about you, but mine's spread across 5 or 6 other institutions: Robinhood, Acorn, Stash. I mean, anybody that comes to me and says, I've got something novel here for you to try out, so I can avoid going down and standing in the teller line. Okay. I'll try it, and PayPal, I've been with PayPal as an example, 12 years, and they send me all unsolicited 2 to 4% cashback credit offers. Do you think my traditional bank, Wells Fargo, has done that after I've been with them for 18 years? Hell no. They have all the information on me for the last 2 decades, and they don't do that, so, but whatever, so different philosophies. Okay. But that's kind of what's going on in the landscape. Now, it's not totally competitive. Okay. And, this is a comparison of fintech business models. Okay. And this is important to all of you as you're looking at languages and technologies to further bone up on, because you don't have to take your horse and stake it to a fintech wagon and say, I'm only going to focus on fintechs. Okay. Or traditional banking, legacy languages like COBOL or C++. Okay. Because you're seeing here different ways that fintechs are partnering with banks based on need. Okay, and some banks starting at the left are more internally focused. They may have no idea how to build a big data competency, okay, or digital marketing. And that may lend itself into business idea labs, internal incubation. And then you start getting into some separation scenarios inside the bank in terms of incubators, which are change the bank versus run the bank, which is more traditional. Okay. And then that could lend itself into fintech partnerships between traditional banks and fintechs. And there's examples on the bottom here. Some of the more radical stuff is I mentioned the separate digital bank. Okay. It may be a completely new name that's detached from the traditional bank where they spin up a brand new digital bank. And then really radical stuff is if they're really getting into it, they may invest and open up a VC/PE arm, the bank itself, and invest in fintech portfolio companies and then try to bring that tech in-house. From a business model perspective and platform perspective, I've also seen non-bank joint partnerships or key bank partnerships. So you pick a city where two of the giants, Bank of America or Wells Fargo and Citi, are competing for mortgage dollars, okay, for decades and for market share. And then all of a sudden, Lending Club comes into town and starts beating them. Okay, well, what's going on now is you have these big banks and they're partnering on the same platform and they're cross-selling their own products. So as a consumer, you can either choose to buy a Bank of America mortgage or Wells Fargo or Citi, and you don't know whose platform you're on. Okay, but they figure it's better to join forces than be disrupted by Lending Club. So kind of cool. So that opens itself up to a lot of technology convergence and overlap in terms of what you pick up on to learn and bring into the industry in some of these scenarios. Now, kind of cross comparing and contrasting to what China does. Okay, I was there for the last 4 years. And China kind of looks at fintech more through the lens of big tech or teletech. And when I say teletech, it's telecom. So you've got China Unicom, you've got my former employer, Huawei, you've got China Mobile, okay? And the banks, what they're doing is they're partnering with these big tech, teletech giants instead of individual smaller fintechs to drive innovation. And from an acceleration perspective, it's taking off. Okay, because obviously the telcos and the big tech companies have all of the innovation under the roof. Okay, and if they partner with a telco, okay, and an IT company like that, 5G, IoT, it's only going to, faster digitally transform the bank, and that's exactly what's going on in China. It's really, the last 20 to 40 years, China moved from an agricultural economy to e-commerce giant, okay, and with their own digital currency now coming up, all through mobile devices. So pretty big drastic difference between the East and the West. The regulatory aspects are a different discussion now, so it's a different beast in different areas of the world. Now, from a tech impact perspective, you can kind of look at this in two segmented areas. So you've got the multi-channel, okay, where the banks are starting to branch out and move in across industries, horizontal digital transformation, improving customer acquisition and experience, further ubiquitous financial services. And then you've got, how do we, from a core technology perspective, okay, for connectivity, data privacy, computation, and scaling, what tech do we focus on? And you can kind of see, obviously, it's the top half that's getting more of the priority. And I mentioned integration and APIs. That's number one. And obviously, you need to have that. If you have closed APIs, you're not going to get into advanced learning or advanced analytics and machine learning because you'll be in closed-end loops. Okay, you can't get a full picture of what your customers want. So what provides further input into that are conversational interfaces, all from the edge. So chatbots, voice devices, okay, call centers are being more made intelligent. And then cloud processing obviously is the big enabler for all of this, okay? And then on the bottom, you kind of have, really focused on advanced biometrics and cybersecurity and processing scale through blockchain, Internet of Things, quantum computing. Okay. Um, and then focused on mobility and wearables as well. I already kind of talked about this. This is really, if we start to look at the 5 key areas at the intersection of financial services and tech, it's really at the front end, once again, digital and mobile experience at the top, followed by, almost in priority, big data, AI, and advanced learning. Okay. And then you have the open APIs I mentioned. And then from a, scalability and security perspective and data integrity, blockchain and biometrics and adaptive security, facial recognition is coming in here. Okay. To support those top areas in terms of core versus emergent. Now, this was put together after about 4 or 5 years of research that I led in China. And those models that I mentioned earlier, okay, those 5 or 6 platform models in terms of disruptors, this kind of looks at the technologies, okay, that are coming, and which of those platforms is deploying those and prioritizing those. So you'll see the left side of the chart, okay, is really colored a lot of green with AI and analytics. Okay. And then, kind of following with digital wallets, connectivity, biometrics, advanced cybersecurity. Okay. I mentioned the priority for the APIs. Okay. But that hasn't been fully executed and realized yet across the board in all of these models. Okay. So a lot of them are still kind of functioning, okay, in closed end loops trying to fend off competition. Okay. And they haven't opened up as much as they should. And that's why there's lower adoption and usage, at least for the next couple of years, based upon the research that we found in terms of use cases and applications that have been developed. Okay. So that's what this is kind of showing, but you can kind of see what jumps off the page is definitely AI and analytics, and to a certain extent followed by digital wallet and connectivity in terms of high, medium, and low. Now, looking at some of the other technologies in isolation a bit, this is an interesting chart in terms of uptake by consumers to reach 1 billion users. So debit cards, which were considered at the time pretty innovative and disruptive, it took 41 years, or it was speculated out 41 years to reach 1 billion users. Okay. 5G is only going to take 3.5 years. Okay. So it's scaling, dramatically. So that's kind of telling us we're still subsisting with that brick tied to our hand, the last thing we do at night. And how many of us on the session here can say you fall asleep with your phone in your hand? I know I do. I mean, it's ridiculous. I mean, it's crazy. So that's going to continue, and even more so in geographies that don't have traditional tech or legacy infrastructure, and they're mobile first. Okay. So that's what you're kind of seeing here. Okay. And before you can even get further, your head wrapped around 5G further, 6G is already coming. Okay. And that's going to drive convergence even further. Okay. In terms of, RPA, AI, facial recognition, AR, and VR, all from the device. This is a chart that KPMG put out, and in terms of where they see the enterprise value, definitely, okay, quite a bit on retail and finance. Okay, and those industries, like I mentioned earlier, e-commerce, is kind of merging a bit, converging with financial services in terms of being ubiquitous. Okay. And then you kind of see a distinction here between campus use cases, okay, versus city use cases. Okay. So smaller areas, hence manufacturing, okay, versus something that would be across a larger scale in terms of consumers. And that's where you're seeing finance, professional services. I think there's still a lot of room for pharma and healthcare to be disrupted as well and kind of converged with some of the other industries. And this is showing the value for 5G as more consumers take to the devices more across multiple industries. AI, okay, kind of tracing this through kind of a history. It started with internet AI, then it kind of moved into some business applications in a second wave, 2004-ish. Okay. And then we kind of moved into perceptive AI, or more based on specific tailored consumer needs. Okay. Facial recognition came up with this, voice. Okay. Amazon Echo. Okay. Alexa. And then you're starting to see now in the past few years, more autonomous AI, which is moving more into the convergence direction across industry verticals and platforms. So autonomous vehicles, okay, and Tesla, electronic vehicles, connected vehicles, okay, things of this nature. And soon you'll see, payments capability from your card hash, as an example, okay. And then on the right side, some of the top AI applications, okay, and these are very much siloed still, okay. So it's kind of still a blend between the wave 2 and the wave 4, okay. There are some that are cross-cutting, so fraud detection as an example, connected machines, okay. But in a lot of sense, the innovation and the focus has been on specific business applications and verticals. AI in financial services is really, 3 areas. So natural language processing, okay, that's becoming more and more popular beyond dumb bots. Okay, so we've all gotten, dragged down the journey of talking to, there's a great commercial where the guy is screaming on the phone at the the voice the voice menu. I mean, my wife laughs at me all the time because it's like I'm screaming on the phone and the voice recognition system is just not getting it. Yeah, I mean, it's just like attendant. It's like, you want to talk to somebody, physically, you get so frustrated. So, really areas to improve upon NLP. Okay. Machine learning as well, primarily in fraud and risk and compliance. And then computer vision. My vision here is really, facial recognition, advanced biometrics tied to financial transactions. Okay. And, I'll use the example that facial recognition is all over the map. So, I mean, you can opt in as a consumer when and where you want to use it. Okay. It doesn't matter what it is. Okay. If you want to use it, you opt in or you opt out. But if you send $2 to your son for his lunch money, okay, versus sending $500 million, you're not forced to use it or not. Okay, necessarily. I mean, so my point is, it should be used in terms of, the next generation of risk and compliance, as an example. If you want to transfer $500 million, okay, then you need facial recognition and an iris scan plus two-factor authentication. If you want to send somebody, your car detailer or your cleaning lady $100 on Venmo, you don't need it, as an example. So, but we haven't gotten there yet, and it's really it's kind of frustrating. At 2021 we haven't, because it's largely, I mean, we're all bent out of shape about privacy in different geographies. Okay. And then there's regulations back and forth too, which is understandable. So, but a lot of opportunity there for sure. Um, this is contextually pretty good for you folks, because you can kind of see here different comparisons on AI algorithms in decision making. Okay, where there's clear boundaries. Okay, where you're focused on algorithm development, and that may apply across, different languages in every programmer. Okay, so rule-based decision making, Boolean data, and then some examples. Okay, and getting into statistical reasoning, simple regression versus, well, you may have supervised, unsupervised learning and pattern recognition. Okay, so this is more outside of evolving from a programming language or languages into data science. Okay, and really getting into data architecture and taxonomy and construct. Whereas you're moving more into AI and some of the use cases I mentioned earlier, autonomous vehicles, intelligent chatbots, and digital assistants. So that will require multiple languages, okay, and complex systems, okay, in terms of the algorithms. I mentioned this already. Most of the work in advanced biometrics is in fraud, okay, followed by fingerprints and physical biometrics, and then we get into transaction monitoring, and last area is really behavioral biometrics, which is starting to be looked at by the banks. Quantum is focused on that bottom half of that chart in terms of, in financial services, portfolio optimization, okay, and coming up with the optimal outcome in terms of compute and processing. Okay, so this is kind of looking at an evolution of processing power and application by quantum type, and kind of a rough order of magnitude anywhere from 3 to 15 years out based on that type of quantum. So whether it's universal, analog, or hybrid between classical and quantum, and then whether it's what's called an annealer, it's doing specific kind of functions. And some of those functions don't fall classically within financial services. It could be defining how to produce hydrogen or a chemical compound, where there's a lot of work going on in quantum computing, in that respect. The thing to kind of remember for financial services, though, is it's really probably more horizon 2 and 3. Okay, where you're getting into, like I said earlier, optimization of portfolios, a lot of data, a lot of input scenarios, okay, to come out with the optimal output or outcome. Okay, whereas in Horizon 1, we're looking at specific annealed functions. Okay, so how do we send a cargo ship through the Arctic Circle, okay, versus going around the bottom of the world? And, based on weather and everything, what's the optimal route? Okay, also applied to traffic in cities. Okay, some application in credit and asset scoring on an individual asset class basis. Okay, but further out, based on horizons getting out to 10 or 15 years for maturity. The biggest industry vertical, that's being focused on here in terms of estimated value is finance. Okay, followed by global energy and materials, and then we get into pharma and some advanced industries. Not really any use cases for consumer yet, in terms of value. So that's still not being focused on as much in terms of quantum. And then some of the players. So it depends on where in the world the companies are. More in the East, I would say China is focused more on cryptography or communications aspects of quantum computing. Okay, whereas in the West, in the United States, we've been focused more on hardware, and Europe. Okay, the software area is wide open right now. Okay, so nobody is really moving the needle forward in terms of being a leader in the world. But it kind of, the dividing line seems to be a little bit of cryptography, which quantum is certainly disrupting the traditional schemes in cryptography, communications, quantum communication, and then hardware, the machines themselves. And then, in the West, we have IBM, Atos, Google, Intel that are focused in this space, and some startups. Now, blockchain, moving into blockchain, we've been at this probably out of all the technologies I mentioned, okay, that are impacting financial services the longest, for well over a decade, but it still has not moved the needle entirely forward and disrupted the industry entirely. Okay, it's more focused on consumer or an alternative to financial services, i.e., with Bitcoin and digital currencies. The thing to keep in mind, though, is it's just like many techs, it's a layer, okay, or a model, all the way down from the network layer to the data layer, consensus layer. Last time I checked, there was about 78 or 80 different consensus types. Okay, and that's the protocol that determines, okay, the processing for the applications and the services above it. Okay, so then you have the platform layer, and typically it's been these three major camps: Ethereum, Hyperledger, and R3 Corda, and they all have different consensuses that they've developed and engineered based on their applications and where they're choosing to go. Okay, and then your services layer, smart contracts and tokens or coins, and then the application layer, distributed applications for distributed finance, and then you'll have different UX and UI based on those. Now, when I was with Huawei, and even before that, when I was with a blockchain startup, it was frustrating me because I saw how this tech could disrupt the industry. Okay, but after working in the industry on the traditional side in IT for so long with core systems, I was always focused on non-functional requirements in terms of success on systems. And, what were the leaders and the tech that separated the leaders from the laggards? And it really came down to, when I thought about this, well, if you're going to do blockchain and come into the enterprise, you've got to do all five of these well. Okay. And I've seen this play out with a lot of startups where a startup will get up on stage, a blockchain company, and they say, well, we can scale and perform just as well as Visa in terms of transactions per second. Okay. But then they don't do the rest of these that well. Okay. Or they'll say something like, well, we can perform and scale as fast as Visa, and we're the most secure blockchain. And that makes me laugh because you'll see I don't have on here security. Now, should I put down on a similar chart for an ice cube that it has to be frozen? Do you get my point? If you're going to have blockchain, why are you touting that it's secure? Well, that's its purpose in life. Just like an ice cube's purpose in life is to be frozen. Right? It's kind of silly. So my point is if you're going to get into coming up with a better mousetrap, a better tech, it's got to disrupt what the tech that's been playing in the industry for the past 50 years has been doing. Okay. And it really boils down to these five areas. So it's got to scale. Okay. High performance. I mean, consumers need real-time performance. Okay. It's got to be secure in terms of identity management and privacy from the device at the edge through all types of networks into cloud, into hosted infrastructure. Okay. Not just part of that chain. Okay. You've got to be able to have private and public integration and processing. So this is the world of Ethereum versus R3. Okay. Ethereum's a public blockchain, DeFi. Okay. But that's good for consumers and all of these. Well, let's put my marriage license on the blockchain. But what does that have to do with an enterprise? Right. So it's got to merge public and private blockchains together. Okay. So it will take consumer finance or the real economy to the market economy and corporate systems. And for you folks, in terms of interoperability, programmability, okay, this is the key point. Focus on JSON and Python. Okay, they're the ones in this space that are making it happen in terms of that last point. Okay, because any of the emerging tech, okay, AI, IoT, blockchain, the more that you move into convergence, they're using JSON and Python. Rust is another one. Another next gen, Golang is another one. Okay, they're using these newer languages, and that's going to drive further convergence across technologies. Okay, instead of in isolation. I mean, Java started at JavaScript, but that's a lot of web services, SOA front end stuff. Okay, when you start to get into data and AI, you're going to get into JSON, Python, and things of this nature. And that all fuels, I mean, none of it matters if nobody uses it. I mean, usability, usefulness, applicability. There's another chart I think I have coming up. Yeah, it's coming up. It's like, since blockchain's been out, nearly half of the use cases have been in supply chain finance and trade finance for the traditional industry. 49% of the rest of the stuff is an amalgamation of other. Okay, so I want to put my digital representation of Furby on the blockchain as an NFT and send it and sell it for $1 billion. I mean, it's just, it's just hype and craziness what's going on, but when you separate, the wheat from the chaff in terms of enterprise, it's trade finance and supply chain finance where it's being applied. So, and that's kind of what this is showing a bit too. As we go from 2017 to 2030, where is the uptick in terms of business value by vertical industry? And you can kind of see the changes. Finance is slowly and slowly growing, as is retail and commerce. So those industries are going to further converge and connect the market economy and the real economy with blockchain. Here's the chart I was mentioning. So you have, really a couple of key segments in terms of use cases: cross-border payments, settlements, trade finance, supply chain finance, a little bit getting into emerging markets for lot lineage and provenance. So this is where there's no land registry. Okay. And, you've got, thousands of acres in a country where nobody knows who owns it anymore. It's been passed down generation to generation. That's a perfect use case for blockchain. Put all that stuff on a blockchain. Okay. But, you'll see in the purple, well, what's in the other category? It's 48%. It's a bunch of rubbish of stuff that, is, one quarter, 3 months this year will be out of favor by the end of the year in terms of a use case. This is where all the ICOs came up, okay, a few years back. And a lot of people were getting, kind of frauded out of their money. Okay. So still some work to be done. Cryptocurrency, I mean, you're all, using it. I'm using it. I'm investing in it. So it's becoming more and more, okay, of a use case across platforms as well, especially in e-commerce. So I just get frustrated with these exchanges that hold your money, for 5 to 7 days before you can move it. I mean, it's, Coinbase is, I mean, they just launched their massive IPO and it's like, come on, guys, I got to wait 7 days before I send $5,000 somewhere. I mean, come on, give me a break. I mean, it's self-defeating, right? So, but anyway, it hopefully it's going to continue to improve and there'll be further integration between the old world and the new. Okay, so kind of getting to a little bit of a closure here, and this is a great chart, series of charts. You always get into, maybe you folks, in when you're looking at languages, you're trying to determine where to focus on or what languages to focus on. Well, this is looking at it from a number of different dimensions. So you have one of the metrics or scorecards is what's called the PYPL, Programming Language Popularity Ranking, based on Google Trends. Okay, but there's a number of similarities across these three charts. Python and JavaScript are typically still ranking up there pretty high. Okay. Tyobe, okay, has been an index that's been around for a while. Engineers have kind of contributed to this. The big search engines have contributed to this, e-commerce platforms. So it looks at it a little bit differently, okay, in terms of popularity, okay, and what the focus has been on, based on specific use cases in engineering skill sets in those areas, okay, versus trends and maybe more hype on the left side, okay. So I thought this was kind of useful to cross compare, okay. GitHub is obviously, by commits, okay, and it's fairly representative too. I mean, this is probably a better indicator, okay, because this is real life. If you look at the Fortune 50, this represents about 70% of the Fortune 50 companies and what they're committing to GitHub. Okay, so in terms of an indicator for you folks, I would say look at all three, okay, for really a cross-dimensional view. Okay, but if you're really looking to get a job in a Fortune 50, okay, and where you can apply your skills, probably this is probably the most representative right now. Okay, and true to form, if you look at these languages, it represents kind of a meshing or a merging of the old world, okay, with the new world. Okay, because you're seeing C++ on here, you're seeing Java on here, you're seeing C prime, God forbid, but it's still on there, and C even. Okay. And then that brings up kind of, I added another paragraph off to the right. Okay. Difficulty ranking. Okay. I mean, I started my career 20 something years ago with VBA, and I got all fired up about object oriented design, and I thought that was really cool, and but I don't understand why it's being ranked difficult now. Maybe from the class structure and compiling it across multiple classes as you get more complex in terms of the application. Okay, and then you see some of the other ones there. Okay, and none of these, C, I think, is the only one that shows up on some of the other charts. Okay, and none of the other ones are even on the other charts, so they've kind of fallen out of favor. So once in a while I get into a blog, somebody's raving about Perl and how great it still is, or something, but yeah, I just thought that was interesting to include there too. And then, the last couple of charts here, a little bit pie in the sky. Okay, but this is kind of showing, for supply chain tracking and audibility, convergence, this is kind of farm to table. Okay, in terms of food. Okay, where you would have IoT, edge sensors, and blockchain for supply chain. So you can really track where your food is coming from a supplier perspective. Okay, and you would use IoT and blockchain in terms of integrated technologies. Now, this chart right here is really cool. Okay, I mean, this is taking, if you look at the center, it's a bit of an eye chart: blockchain, smart contracts, AI, IoT, and different stages of a potential evolution across all industries, where we have minimal human intervention systems, stage one, all the way to zero human intervention systems, and then fully conscious machines. Okay, who knows how many years out that is. But the point here on this is context and inference based on a industry specific dataverse in the bottom right. So based on what's needed, okay, in terms of a service, that dataverse would feed into via a controller and interfaces, sending the data to blockchain, AI, and IoT for processing, and then outbound to different industry verticals to drive further autonomous sensing machines. So that's the key part of this. Okay, and we've struggled as a society definitely around that bottom piece. Okay, where data is exploding, but context is completely lost, and we don't know how to apply it to specific technologies to move things forward fast enough. Okay, so I thought that was kind of cool. I would love to deliver this. I mean, in one shape or form, even a small project, it would be pretty cool. And I think that's it. That's all I had.
That was a lot of great information and super captivating and really, really, really interesting. Does anybody have questions for Bill about, any of these various topics that we've covered? Or even general questions, of course.
Yeah, comments, observations, rebuttals. I mean, all fair game.
I have a couple of comments. Actually, Saturday I had an experience. I was trying to order flowers for my Brazilian mama. And I was using a local flower shop, and they would only accept payment through what is their version of Venmo. I'm not Brazilian, so I don't have a CPF number. And so I'm like, well, okay, how do I order these flowers if I don't have that? So I was curious, as you were talking about, like the international exchange, like a Venmo style for international stuff, right? Like, is that, I guess there's lots of different programs, but are there, I guess I hear of Xoom, XOOM.com, where you can send money back and forth. Yep. What other have you seen?
Well, I mean, it's still a bit open. Okay. And, from the flower perspective, okay. And, even cross border, I think the area that's becoming more open is cross border remittances. Okay. And TransferWise is another example. Zoom is an example. Even PayPal, okay, is starting to move into China now. Okay. And it will. I mean, and blockchain as a technology is enabling a lot of that. Okay, but still, you're kind of fighting. I think a lot of the companies are fighting data privacy and regulation. Okay, and being able to move across borders and operate seamlessly across borders. But it is getting better. There's no question about it. So, and I think what's going to continue to fuel that adoption and open it up more is digital currency. There's no question about it. Okay, because Bitcoin as an example, or even Ether, that doesn't stop at country borders in terms of payment. So the more that you have a vendor that's a traditional payment provider, or even a retailer accepting digital currency as a payment, there's no back end integration, okay, to a bank necessarily. So you're able to move more seamlessly across countries in that regard. So.
And then I forgot the other thing that I had thought of. It'll come back at some point.
Okay.
I'd like to see what kind of questions our students have.
I have a question. So first of all, Bill, thanks for your time. That was a lot of awesome data, and thanks for validating my professional career choices throughout your presentation. I appreciate that.
Well, that makes me feel good. Good.
My question is, so let me see if I can phrase this correctly. So throughout your presentation, you were talking about the value of open APIs and open API integration and how that's going to kind of transform the fintech industry. And earlier this year, we've seen examples in the blockchain industry with companies like Cardano and SingularityNet partnering up to make API calls throughout their blockchains using like the Cardano blockchain infrastructure to transition their API calls over that kind of a network. And they're talking about doing things like a trillion API calls per second over their blockchain and things like this. How do you view the convergence between open APIs and blockchain APIs moving forward over the next couple of years, and how is that going to kind of integrate into the fintech? Because some of these API calls aren't necessarily financial APIs driven, they're more just data calls in general, but they're using blockchain to make these communication transactions happen.
Yeah. I mean, and I see that as, getting back to the core tenets or principles of blockchain. Okay. And, why it really came into being was around data integrity. Okay. And security. So, they may be using this, okay, SingularityNet and Cardano and some of the use cases to gather more information, okay, from the outside and add it to the blockchain. But invariably, it's going to come down to, I think from a relevance and importance perspective, what needs to be on the blockchain versus what's not as critical. And, and that's the benefit of the blockchain is really through that morass of data that's out there and all of those API calls. What do you want to really make institutionalized that you can track and audit, okay, as a source of truth? Okay. I mean, do you really need to know what time somebody gets up in the morning and gets out to their car and puts the key in the ignition? Right. That's something to know about the consumer, okay, in terms of their preference, but it doesn't need to be on the blockchain or not. So, and I think invariably that's what's going to happen. And it gets back to, the chart that's right here. Okay. It's semantics, knowledge, and inference. Okay. So those examples that I kind of gave you, as well as devices and sensors, machines, okay, that are capturing this. Where are you sending that? And you can kind of visualize SingularityNet in the middle, at least from a blockchain and AI perspective. Right now they're just, doing all these massive calls from that dataverse, but where's the inference? Okay. And where are they using that information and how? Okay. And some of it may be interesting for AI. Okay. But, others that could be, data integrity, and it needs to funnel into a smart contract for processing for later on. So
I totally understand what you're saying. Do you view that kind of functionality moving more into the financial sector using blockchain for proof of integrity when I'm making, Visa transactions and things like that? Do you think that's the kind of technology that the banking system would start to implement, or are there already proof of stake measures in place that they're using in their existing ACH and SWIFT networks?
Yeah, it's a bit of both, and it's going to be more so, okay, because it's going to definitely be more so. Visa, MasterCard are already moving in this direction, and some of the traditional institutional banks are, because they can't stand on the sidelines and ignore Bitcoin and Ethereum and Ripple and these other currencies from an investment perspective. There's too much money sloshing around.
Right.
Okay, and consumers want to use this stuff and invest in it. So the only way to track it is not through traditional financial systems and ACH. You got to track it where it's born, on the blockchain. So from a risk and compliance perspective, that's where they'll get interest first. Okay. And then they may start to analyze, well, what are they using it for? Okay. What are the consumers using it for? But you remember that chart I showed earlier. I mean, quantum computing and some of the other technologies in the consumer space are last in terms of
Right.
priority. So.
Awesome. Thank you.
Yep.
Hey, Bill, I had a question,
Sure.
or a couple questions. There was a slide you had around the big 5 accelerators in financial technology.
Yeah.
And what it made me think of is it had a similar graph, kind of top to bottom, of different industries. You pointed out finance is by far the largest industry in that area. What kind of came to my head there was, when we mentor our students, we talk a lot about, trying to help them find that sweet spot, that perfect balance between their skills, their passions, and the kind of work they want to achieve at the end of the day, because that's the kind of work that's going to help them stick with it long term, to find that dream job, if you will. Your slide just kind of made me think about that, as they forecast now getting into new technologies and potential career paths like Eric was talking about. Are there resources like this, or how can they learn about forecasting ahead at information like this, so that they can connect it and go, oh, I'm interested enough in finance. Maybe they went to school for finance and never, but now they're in tech and they have a totally different way to connect into it, and they see that's a really healthy trajectory for their career, or something else. I guess the question is, how do you have any insights to that? And then also, is there information available or resources where they could, take this kind of bigger picture look, which I really think is the big takeaway here, is just thinking ahead while being in the moment.
Yeah, I mean, I've when I was in China, I contributed to a couple of the schools there in Hong Kong had developed fintech programs. Okay, and I contributed as a guest speaker and part of the curriculum. And to answer your question, I think that's really, and more standard universities, the bigger ones, mid-tier, and smaller ones are starting as offshoots. It's not really coming, I don't think, so much from the financial or finance side of the curriculum in the school. Okay, I've seen some of the state schools here, University of Miami in Florida, and they're launching these fintech programs out of the engineering IT side. Okay, now for me, from a student perspective and school curriculum perspective, I think that's a natural place for it. Okay, even though it's called fintech. Okay, you may have heard the term tech fin. Okay, because that's really what's going on. Okay, with these fintech companies, and back to some of the previous charts, they're focused on a certain technology area, whether it be blockchain or artificial intelligence. Okay, and they're using tech as an accelerator for disruption. So from the perspective of, and you don't have to be a finance wizard. Okay, in a lot of these fintech companies, okay, as a traditional finance wizard is known to be, okay, and a lot of CTOs that are coming into startups from fintechs, okay, are technology people, okay, whether it be infrastructure, cloud computing, or web services and so on and so forth. Okay. And typically, once again, they're disrupting not the end-to-end finance function. They're disrupting a section of it. Okay, whether it's payments and so on and so forth. And the other takeaway on that, so if a student, focuses kind of on fintech or looks for fintech programs, and maybe Lainey, this is something, V-School can look to do, is build a fintech section of courses, which I would love to contribute to that too, and, but that would kind of merge kind of some of the tech content with the industry application. Okay, but it's not too far of a reach because it's really, like I said, tech fin and fintech. Okay, where you don't have to be a diehard industry finance guy for 25 years as a banker. Okay, and you can start in payments, and payments right now, everybody knows payments isn't owned by the finance industry anymore. It's nobody's industry. I mean, and the more technology you learn about payments, you can apply in multiple industry vectors. So.
Yeah, that's great. And it almost seems like technology is just really all of this really kind of coming together here. It's almost, I guess what I'm hearing is it's almost like it's really just the vehicle for allowing you to continue to use your skills and develop and problem solve, not necessarily on something you're passionate about, but on something that's definitely, it's a vehicle towards a greater cause and a greater part of what's happening.
Yep. Absolutely.
Cool. Thanks for sharing that.
Yep.
Any other questions? And I did note that, Bill. I'll bring that up to our team because I think that would be an interesting avenue to explore, especially at least resources and helping our students expand and look at the bigger picture, which I love. Any other questions?
I've got one. This is Brian Richens. I'm wondering, with all these giant companies doing so much in the fintech space, does a small startup really have much of a chance to compete with them? With, obviously there's disruption that happens all the time, but between all the technical and legal and compliance hurdles, how do they get a leg up into the industry and compete with these giant platforms and all their resources?
And it's a very, very good question, and it's not easy. Okay. And you've got to really, I think, from a couple of angles or dimensions to answer that, you've got to solve a problem, okay, that the giants, and it depends who you're calling the giants. So if it's the traditional, in context to this discussion, if it's the traditional bank, okay, that's one thing. But if it's a startup compared to a big tech company, that's another thing entirely, another answer. Okay. Because the startups are having, they've had historically in this industry sector, some success at and I kind of answer this in really three ways: faster, cheaper, and better. Okay. And historically startups have kind of answered that challenge by saying, well, we can do it faster and cheaper. Okay. Than the big boys. Okay, and to some degree that played out, but I don't think across the world that's relevant anymore. Okay, because nobody's exponentially faster than anybody else in 2021. We're talking, smaller magnitudes of difference. Cheaper, well, it depends. I mean, if you use contextually this example in this industry, payments, okay, you're not paying for a payment service exponentially more than anybody else anymore. You don't really care. It's become so marginalized. So that only really leaves better, okay, in terms of a comparison point. So if you're a startup, how are you making the consumer experience better, okay, than the traditional bank or provider or even the big tech giant? Okay, and that's where, if you're a startup and you're competing against Amazon or Google or whatever the case may be, that's kind of moving into this industry, you're going to have a bigger challenge. Okay, because what they do is different. Okay, from a strategy perspective, Amazon's strategy has kind of been, well, what gaps do we have in our portfolio from an enablement perspective? And then they'll go out and they'll try to acquire and take out the competition. And whatever they acquire from an M&A perspective, they make a utility. And the next thing you know, it's an Amazon and you don't even realize it. And you're like, oh, cool. That's a new function I didn't realize was there, but that came from a startup probably, so it's different, startups competing against them. So, and I think really it comes down to that one chart where you saw in the middle, you have the house of the bank. It's back here. Let me see if I can pull it up real quick. We have the house of the bank in the middle. And then you have the big tech on the left and the fintechs or the startups on the right. Okay. And the startups on the right have gotten traction and market share from specialization. Okay. They may have started and gotten into the space by being faster or cheaper, but the ones that have survived have become better. Okay. And they've taken on more function. Okay. And they've increased being a better provider of a consumer experience in terms of becoming further embedded in their life, as an example. So PayPal's an example of that. They're expanding beyond payments. So that's what I would say. If you're a startup and you're trying to compete both against the industry, the traditional industry, and the e-commerce giants, you've got to become hyper specialized to become better. Because faster and cheaper isn't necessarily going to cut it anymore. You're not going to survive based on that. That's my view anyway.
Great, thank you.
Yeah.
Thanks, Brian. That was a great question. We have about 8 more minutes here scheduled. So does anybody have any last questions that they want to ask? We'll open it up. And then also Joseph has added in the link to connect with Bill on LinkedIn. So that's included in the chat if you have any questions there. But any last questions or comments or words or anything on any of these slides?
Well, thank you for I'll say, thanks again for having me, Lainey. And this is a presentation that evolves and changes, and every time I present it, it's not quite the same for every audience. And this audience was definitely different. Okay. And so I was able to kind of tweak it a bit, which I enjoyed doing. Okay. I mean, and I hope I made it relevant to all of you. But I definitely enjoyed this kind of angle and dimension of presenting it to this group.
Yeah, I think this was amazing. It was very, very informational. Eric also Lindgren, he had a jump, but he thought it was outstanding. Marcus, I saw that you had Joseph covered your question and Brian brought up an awesome topic. Just a lot of great information. I think everybody agreed. And it was super, honestly, very captivating. I didn't even realize we were way over the hour. So, which is good. We scheduled an hour and a half to be safe. But thanks so much. It's been really awesome to see the bigger picture. It's got definitely my brain going on different wavelengths. And I just want to thank you so much. This is like super awesome. And we will be sharing kind of the recording for anybody. If you have people or friends or family who may be interested and have missed this, I'll share it on the meetup and within our Slack channels. So please let me know if you didn't get it or you need more information. And again, Bill's information's in the chat box, but it's been phenomenal. Just a really cool big picture of everything. And I love the visuals. I'm a visual learner, so it's been really cool to see everything in perspective. And just want to say thanks. We love having you speak. And this is such a cool topic, like so different, and it's really cool.
Cool. Thank you all.
Thank you, Bill. Appreciate it.
Yep.
Thanks,
Bye-bye.
everybody. Have a great rest of your day. Talk to you
Have a
later,
good
Bill.
week.
Thanks,
Bye-bye.
everybody.